Hi, I'm Janet Brophy with Home and Income Realty, and thanks so much for listening to this newsletter about the mortgage interest tax credit. I have here with me today Brian Heckman from Heckman Mortgage Group, and he's very knowledgeable about this tax incentive. Brian's been in the mortgage business for about 18 years, so let's ask him some questions and find out all about this. So this is for the first-time home buyers, and how is the IRS defining a first-time home buyer?
Great. So the good thing is that first-time homebuyers aren't just literally the first time you ever bought a home. It's just that you have not owned a home in the last 3 years. So you could have owned a home 3 years in one day, and you still qualify for the program as a first-time buyer.
That's great, because there are a lot of people in that situation, I'm sure.
Yeah.
So don't people already get to deduct their mortgage interest on their taxes?
So the really cool thing about this is that when somebody goes from not owning a house, not having a mortgage, not having the deduction for that, then they go do that, they love us at tax time because they get a nicer refund, a bigger refund. This is a tax credit, so different than a deduction, in that it just simply adds on top of whatever they're already getting back for a tax refund. So if you're eligible for up to $2,000, if you get that $2,000, it's just in addition to anything that you've already gotten already.
Okay, so it's like free money.
It's like free money.
Basically, okay. So how, and there's some kind of mortgage interest credit certificate they have to get from you?
Right, so when we go through and we go through the formal underwriting process, then we send out, this little piece gets underwritten in-house, but then the Florida Housing Office actually issues the certificate, which is what the consumers would need when they file their taxes at tax time.
Okay, great. So what's involved in getting that certificate? Is it like a personal situation, individual thing with each client?
Yeah, so there's going to be some income limitations. There's always loopholes. There's all sorts of stuff. So the easiest thing is just to get in touch with you, and as part of the approval process, we work through that. But I mean, the key thing for people to realize is this is up to $2,000 every single year that you occupy the property. So it's a huge opportunity. You can't get it after you close on your first mortgage.
So they need to talk to you first.
So you got to do it before you close the transaction.
Okay, great. Well, I put a contact us button at the end of this email, so if you have any questions or you want to find out if you can qualify for it, go ahead and send us an email, and I'll be happy to get back to you with any answers for your questions. Then thanks so much for listening to this email.